Good morning, Facebook. It's Wendy. How are you guys? Hope all is well, and welcome to the first Wisdom and Wealth series that we're going to have on Wednesdays. We're coming to you live from Bridgeport, Illinois today, or Bridgeport, Chicago, and we have some questions that have been inboxed to me, and I would love to share with you. But in the meantime, first, I would love to thank everybody who is supporting me and watching what we're going to share for you today and onward and forward into Wednesdays. It's a beautiful day today in Chicago, and I hope you guys are enjoying your day. And thank you so much for joining me again. We've got Jennifer. Thank you so much for joining. Robin, Pam, Diane, Jerry, Michelle, and Mia. Thanks so much for watching. Nick, Michael. Oh my goodness, I am so blessed to have you guys all follow me. Good morning, Nick. Thanks so much for joining me. You are definitely one of my greatest supporters, so thanks so much for joining me. Quintella, thanks so much for sharing the video feed. So I'm going to get started today. So I just wanted to kind of share with you some of the questions that I have been given. We've talked about a lot of questions that kind of circle around. We've gone through a big, massive turnaround as far as the economy goes. We went through a big, resurgence of the market. Unfortunately, we had to deal with some moments of economic recession. And so as a result, we've had people that have filed bankruptcy or short sale. So one of the questions that was asked is, young lady had to go through don't own a home yet, but did have to file bankruptcy, do some personal issues, and wanted to ask the question of what will it take to be able to purchase a home? That's a great question. There are definitely different programs that are available, and one thing I will definitely say to everybody is that we do want to caveat, or I want to caveat every situation. Good morning, David. Good morning, Sandy. Thank you for watching. That at the end of the day, we are going to have to face certain things that we might have wanted to have to deal with. But bankruptcy is a very, very prevalent issue that we've had to deal with over the years. And don't ever think that is a scar or a wound. It's a strategy at the end of the day. And the strategy, it's a way to rebound back from the woes, the financial issues, the hardships that we've encountered. And you can survive this. We're all able to definitely be able to rebound from any situation. And I think we all have had some hardship that we've had to encounter. But in any event, answering the question about the bankruptcy, there's two types of bankruptcies. Bankruptcies 13, which is a reorganization, which means you have to consolidate and make payments, or a Chapter 7, which is a complete deletion of all of the items in your credit and starting all new. So let me kind of tackle on the first one, which is Chapter 13. Chapter 13 is a repayment, like I said, and you can definitely purchase with a 1-year repayment plan as long as you've been on time with your payments for a year and you have the approval of your bankruptcy trustee. Then there are chances that we can definitely explore purchasing, working with you to help you purchase. We can definitely get you connected to a loan officer who is well versed in this, and then we can discuss your situation, because at the end of the day, it's not like back in the day when we were young. If you remember that little bank that you put a quarter in, there's a magnet that pulls the quarter into a slot, or a dime or a nickel. It's not going to be literally dropping into that quarter exactly. It may kind of be in the middle. So we have to explore every situation differently and independently, because that's certainly very situational, because we have to see what's on the credit and why was the bankruptcy, what was the reasonings. And then Chapter 7, which is again a complete deletion of the items on your credit report and starting afresh. That will require a 2-year payment, a 2-year waiting period. But again, the 2-year waiting period is still dependent on whether or not you are able to purchase with whatever. Good morning, Fabi. Thanks so much for joining me. Emmanuel, A. Alvin. Oh my God, guys, thanks so much for supporting me. This immense support is, make my heart flutter. Thanks so much for supporting me. I love you guys. And you are what makes me continue to want to share all of this information on any platform that I can do it, because real estate, as you know, is my life. It's in my DNA, and I will shout it up to the rooftops to share it all with you, because I do want each and every one of you guys to own and be a homeowner, build wealth, build your legacy, guys. Please build your legacy. Legacy is in real estate. And we will definitely together be united and become homeowners and build wealth and retire nicely. Okay, guys? So, but in any event, again, lots of different scenarios that could contribute to a 13 or a 7. So I definitely invite you guys to reach out to me, inbox me, talk to me about your specific situation so that we can definitely help connect you to the right people and we can get started. And one of the things that I will definitely say before we go into the next station or next topic. Hi, Mike. Thanks so much for watching. I haven't seen you in a long time. I miss ya. Is that every situation is going to be naturally different. So please, the importance of reaching out to me, inboxing me, and telling me what is your specific situation, and also noting when is actually your file discharged, because in a bankruptcy, it is the very key component of when the file got discharged. I had a woman that reached out to me. She was completely devastated. She's been doing a 13 for, I believe, 5 years, making payments on time, and come to realize that it was never officially discharged. And she's been on herself for the last 6 months to work on her credit, and I kept insisting on let's pull the credit to take a look. And when she said she was finally ready, we found out that unfortunately there was not an official discharge date until just this past November. So she was completely devastated as far as that goes, and not being able to purchase by the end of the summer. So that's why the importance of definitely having your realtor, your preferred trusted partners, your lenders, take a look at your credit and look at your history. We're not doing it to try to wrap you guys up soon. We're just trying to make you be in position and ready to go for that goal and achieve that goal when it's the time. But if you don't allow us to do that, we might have spent a lot of time needlessly working on something that unfortunately we've come to find out that is not good to go, unfortunately. So my heart goes out to that young lady, but we're going to do our best to make it happen for her. Thanks, Cheryl. I love you. Brittany, thanks so much for joining. Carla, Tanisha, you guys are awesome. I am totally blessed to have you guys all support me. So so that's kind of it for the bankruptcy component. If there are any other questions or topics that I may not have covered, please do reach out to me, inbox me as I'm speaking here. If not, if I don't catch it, as I'm focused on trying to present here, I would love to definitely answer any of your responses, questions, answers, whatever inquiries you have personally, one-on-one, and I can reach out to you and make it happen. Okay, guys? Good morning, Tunisia. Good morning, Bruce. Thanks so much for joining me. So we have a couple of other questions. We had one main question that we kind of used is our little teaser, and as far as credit scores, a lot of times I get to people who are reaching out to me and they think that their credit is really not strong enough to be able to purchase a home. And when I ask for the permission to pull the report and connect them to a lender, we come to find out that, you know, they are pretty strong. And one thing to also focus on is not every 580, not every 600, not every 620, not every 700, in fact, are all the same. They all have different, what is compiling, what is part of your report that makes your, if you will, credit DNA become the 580 to the 700 to the 800. So we definitely need to look at everything independently. I have so many people that also still come to me and say that, oh my goodness, the I'm hearing that, other people, or I'm following people on social media and they're telling me that I can do it with this. And I respond back and I said, it's very likely that, your friend or your family member did purchase with this particular score, but you got to keep in mind that at the end of the day, it is still about your specific situation. Not everyone, no one in fact has the same chemistry as far as the credit and your specific backgrounds. Well, you may have student loans, you may or may not have collections for your medical or a cell phone bill. And one little segue as far as collections go, please, whatever you do as far as paying off any old debt, we in the normal society, your normal thought process, we think that, hey, it's going to be the right thing to at least pay off old debt. Before you do anything, please consult with your lender, or consult with me, and I will connect you to somebody that can help you. And that's going to be your basis. This is the foundation that we're going to build you all up on. We have a financial foundation as far as what to do to help build you to that point. And then we worry about the foundation to the house, guys. So in any event, as far as credit goes, we literally can do the gamut. I have many preferred partners that I work with, and there's different products and different programs that are, again, suited for the specific individual with their specific financial situation. So credit scores can be as low as 580. I've even had people that tell me 550, 500, and it goes up to 850. Your products will definitely be based off of the situation. Products meaning the financial product that you be purchasing under. It be, because it conventional, is it FHA? And that can be another topic that we talk about later on in our next shows to come, as far as understanding the differences between FHA and conventional. But as far as credit goes, the credit has to be a situation where, again, we should at least strive for, we always want to strive for the better, the higher the better, of course, because you have to understand credit is your lifeline. But we can definitely do 580, and I have had lenders that have told me that they could do down to 550, but it does require more down payment. So again, that's why we want to have you guys focus on the fact that it's not just about the number, it's what makes up the number, guys. So with that being said, again, to answer the question, and thanks so much, guys, who have contributed with that to that answer. But the answer is really, it's going to depend, but in general, anywhere from 580 to 850, the higher the better. And it can be a matter of a couple of things that we need to tweak, or actually have the lender tweak for you, and take a look at the items that need to be addressed so that we can help pull your score up. I mean, I work with some phenomenal lenders and repair people as far as credit that can help you get into the position that you need to be. But at the end of the day, one thing I will say about credit repair, please make sure you focus on what your trusted professionals are doing to help you help you repair that credit. Because if you don't pay attention to what you did to help you, unfortunately, to contribute to the demise or the lowering of your credit, then you won't know, and you just paid somebody to increase the score, which is fine, it achieves the goal, but the goal and the objective is to keep that score at that point. So know what you did to contribute to that, so then you know not what to do and what to do. Okay, guys? But again, that is something that I'm more than happy to go offline and chat with you some more, so that we can help you, again, do what you need to do. And it's not just a matter of helping you buy a home. It could be refinancing. It could be looking to purchase a investment property. It could be also starting your own business. So at the end of the day, whatever the key is in the credit, it's very important to get credit as strong as possible. So with all that being said, that is one point that we did cover. So that's topic 2. We had another question that was inboxed to me last night, and yes, Cheryl, awesome. Shout out to one of my preferred partners, Joy with US Bank. She is definitely great people. We're actually working on helping her daughter purchase, and Cheryl has purchased and owned her own home. And believe it or not, her rent was $1,500, and we went from being a renter at $1,500 to owning a home at I think we were at $1,100 with including property taxes, and she lives in the suburbs, so we know taxes are a little higher in the suburbs. So we definitely got her bang for her buck, and we will help her. We're helping her save money, and it is a beautiful thing to save some money. And then if, whatever the goal and objective is as far as saving your money, you could invest in another property. I'm closing a property with a young lady who is going to be my millennial real estate mogul. She is now owning her own property. She bought her property from Nikki, you're too funny. Yes, we will be closing you in a couple of weeks, sweetie. As far as the property goes with this young lady, she owns her two flat. We're about to close. She purchased a short sale, which has equity now in the past year since she's owned it. We're pulled the equity out of her home, and now she's buying her second property, and we're working on her third. So a young lady, probably in her late 20s to early 30s, on her way to owning 2 multi-units. So it's definitely achievable. As long as your mind can believe it, you can achieve it. And I will help you with my trusted professionals. I have definitely plenty of people that can help you. And as far as lenders, appraisers, inspectors, attorneys, I love all of my preferred partners, and we want to help you definitely build your legacy and build your wealth. So with all that being said, let's segue to the next topic. Any particular questions? Thanks so much, Brittany. Appreciate for you following. I know that we will be working together very soon. Hopefully your new job has been treating you well so that we can definitely get you on track, back on track soon. So what was the third topic? Down payment assistance programs. Plenty of down payment assistance programs. There are some that are specific to communities, definitely some specific to areas. I've heard of some trickling of some programs that have come back available as to earmark programs for the South suburbs. So we can talk a bit about, talk more about that later. Again, everybody is welcome to reach out to me, inbox me directly so that we can talk one-on-one and understand your specific situation and your specific interest and where you want to live. As far as, there's programs for city employees. There are programs for specific parts of the city area. Oops, sorry guys, house phone. So, but anyways, as far as different down payment programs, City of Chicago, there are definitely lots of programs out there. There are specific programs. Again, we hear a lot about Renew Woodlawn, and Renew Woodlawn, to my understanding, is right now there is a waiting list, and there are people who are eagerly trying to take advantage of purchasing in that area due to the benefits that have been provided, but there is a waiting list, and we're trying to understand exactly when it will become available. But even so, with all that being said, again, different programs mean for different people. You might want to also check with your employer. Speaking to a buyer last night where we've gotten her pre-approved. Oh, thanks so much. I know I still owe you a book. I will definitely get that to you, MJ, and I will definitely get that to you soon. My apologies. As far as with the down payment programs, again, specific areas, we can talk about Renew Woodlawn. There used to be a program that was meant and earmarked for the deep western suburbs, like in Aurora. So we definitely want to talk to you specifically about the program and how it may affect you or may not affect you, or you can qualify because it's still specific to the particular, as far as credit goes and all that good stuff. Also, check with your job. Sometimes your job can't offer you benefits. I know there is a great program with the University of Chicago. So if you're a University of Chicago employee, I think there is a work history requirement, but with that, you can also still be able to take advantage of that program. I know I've had a couple of clients that are doing that and still taking advantage of it now. University of Chicago is a great one. They are truly dedicated and what's the word I'm looking for? My mind escapes the word I'm looking for, but basically committed to, that's the word I'm looking for, committed to helping their employees stay in the area so that, again, being able to commute to work. And also University of Chicago is a real estate machine. They're consistently buying properties, and they are all about real estate at the end of the day. If you look at all the major people who make money in this world and create wealth, they are people who own real estate, and you can be part of that community as long as you want to be a part of that community. You know, people who come to me renting, they don't think that they can purchase. And last year I've made some really great converted some people who were just looking to rent and became homeowners. It could be a strategy of just buying a 2-unit. If you're already living in an apartment right now and the apartment is fine with the space that you're looking for, well then why not look at you buying a 2-flat, and then you can live in 1 unit and then rent out the unit, and then your tenant will help support your mortgage. And I've had instances where clients were paying probably $500 to $1,000 on their share of the mortgage when their tenant pays. Of course, you got to keep in mind, you always want to budget the fact that, well, what if a scenario happens where your tenant is not able to pay the rent? So you got to make sure you pay the rent. So another young lady that I'm working with right now, we just got her pre-approved, and I'm so happy to be working with her. She was actually a high school colleague of mine, or a classmate of mine, I should say. And so I'm very excited to be working with my old classmate. Go St. Ignatius and the Wolfpack. So with that being said, again, many different programs. Even if it's not a down payment assistance program, there is a program or a strategy that will help you build to the point where you can own property. Okay, guys, we definitely can look at many different options, and we can help you to our best of our abilities. Tanisha, as far as Auburn Gresham, I will have to check, but there may be an option left. It is through the city of Chicago. We can connect one-on-one offline and talk more about that as far as your interest there. But at one point there was something that I was familiar with as far as Auburn Gresham goes. What else was there? My fourth question. Oh, 203Ks. 203Ks. They're a great product. It really helps to open up the inventory to buyers that are looking to live in their own home. Gone are the days of properties where you have to live in a house that is completely updated. And you know, I have clients that are all about that. I want everything perfect, and I don't have the wherewithal to do the work or the connections. Even if you didn't have the connections, the reality is this: your partners will have it. At least a good partner will definitely have that and be able to connect you with the right parties. But it's still, even so, it still requires a little bit more due diligence on your end to make sure you follow up and check in on the contractors to get the work done, get your estimates, do all of that. But I can help you with the ability to connect yourself to a 203K lender and get you approved, get you connected to licensed contractors, because they will have to be licensed in order to do the work, because this is a loan, if you will, that the bank is giving you to do the work. So we have to make sure that we hire trusted and licensed and bonded professionals so that everything is covered. Thanks so much, Jennifer, for the words of encouragement. Yes, Gina, this is live now. Hopefully it is. I see live, so I see people, the number of people watching, numbers changing consistently. And thanks so much for joining me. So as far as the 203K, 203K is a phenomenal product. It can give you the opportunity to just do a couple of minor updates to as far as a complete blowout gut rehab. So, but again, you got to keep in mind that you have to get the licensed professionals and do the work, and it has to be done within a certain amount of time that they earmark you, because at that point the lender is giving you the ability or giving you the funds up front, but it'll be held in an account and it'll be dispersed in what they call in escrow increments. So then the reality is that, thanks, Tavia, I do seek out to give out great information. As far as the 203K, like I said, you're being given the money up front, and so you have a certain period of time that you have to commit to getting the work done, because you're paying on something. So keep in mind, you may be, if you're doing a blowout gut rehab, you're paying that mortgage, so you want to make sure that it's going to be committed, the work is committed and completed on time. So with all that being said, again, we are going to have to specifically cater to your situation, so that we can best help you get that property. Any area is open. 203K is not specific to anything as far as any specific area, not that I'm aware of, but it is for owner-occupant. It's not for an investor. An investor would be a different type of product at that point. And again, I have great lender partners that can connect us to that particular buyer set. So with that being said, it's about almost half an hour that we've been chit-chatting. I appreciate everybody again connecting with me and watching. Please do. The link will become available, and so please do share with your friends and family and loved ones who are interested or considering purchasing. I am your trusted advisor, and I will connect you to people, and between me and my team we can definitely help you get you to where you need to be. Buying seminars are available all over the place. Our office does them on a very frequent basis. I am speaking at quite a few of them. I'm right now participating in one that's for investors based with hard money. So anything that can be done, as long as you want to make it happen, we can make it happen for you. So with that being said, thanks so much everyone for joining me. Again, all of the four topics we discussed today, we discussed about bankruptcy and being able to purchase a home. As far as number 2, what is the credit score that is needed to purchase? Again, that is anywhere from 550 to 850. And of course, the better the credit score, the more options and a better credit and interest rates you will get with that. But again, we will chat offline. Number 3, we talked about down payment assistance programs. There are still some down payment assistance programs. You know, some may have the funds have been exhausted, but have no fear. There are always new products and new programs that are available, and I really stay on top of all of that so I can make sure that, again, so when somebody does come to me with a need, I can try to connect them and be able to maximize their buying power and secure as much down payment assistance programs out there as possible. And then the last item we talked about was 203K. 203K is a great product. You don't have to be Bob the builder. You don't have to be Peter the plumber. We can connect you to those specific parties, and with that we can help you build your dream home. So with that being said, thanks so much Abby for watching me. I appreciate you, and thanks so much for that answer you supplied yesterday. That is definitely one of the winning answers. Cindy, thanks so much for watching. Joanna, thanks so much for watching. So it's 9:31. I thank so much for the half an hour you spent with me. Again, I am blessed beyond belief that you have supported me, but I continue to support you in every way I can possibly can. And if you are interested in any more information, feel free to reach out to me or reach out to me about the book that I had just recently launched, and it's called Results, and it's regarding the real estate industry, and we give you a bird's eye view and an in-depth look at all of the steps of purchasing a home from start to finish, from being able to build the foundation financially to owning a home, to being able to end the process of buying a home and taking you through the entire process from the attorney to the inspector to insurance to even once we close, then even feng shui on how to help you keep a happy, healthy home. As you know, I am very much a believer in holistic healing and healthy practices. So well, this is Wendy Lee signing off. I can go on and on, as you know, because I'm very passionate about what I do. But this is it. I'm signing off. We'll catch you next Wednesday. And this is Wendy Lee, and I look forward to talking to you next week. And in the meantime, please, again, feel free to reach out to me on any questions that you have. Have a great day, guys. Take care. Bye.